All right. So, question on currency reporting. If there are multiple subsidiaries, what is the best way to consolidate the monthly results so that each subsidiary's local currency numbers are translated to a budget FX rate rather than an actual FX rate?
Oh, okay. That's supported in our advanced balance functions. I'm not going to do a building solution 7 reports 101. So I'm just going to dive straight into the function. But the AP bal, in fact, all of the advanced balance functions support fairly advanced multi-currency. So you have the ability to, through the advanced balances, to report any company in any other company's currency. So let's have a go at USA. No, let's have a go at Mexico, because I know Mexico's got some numbers in it. Let's do a balance for all the four codes and let's run it for Jan 2023. I think we've got data in there for that. So this is going to return a balance for all of the four codes. I'm not, and as I say, I'm not building this out correctly. I'm just kind of throwing some formulas in. So there we go. So we can see here that we've got an income balance of just under 5,000 Mexican peso. Now let's play with that in different currencies. So I'm going to first of all copy that across. And the benefit of hard coding all the formulas is I can literally just copy the formula and start playing with it. So let's have a look at changing the currency. So go to the option, hit the lookup button, and I can change the subsidiary context. So I can say I want to view my Mexican subsidiary in the context of consolidated. So I know for a fact that my consolidated notional subsidiary is US dollars. So we've now converted Mexican peso to USD. Now, this is currently reporting in the actual currency as opposed to the budgeted currency. Now, I don't know if I'm assuming we've got budget currencies set up. So let me show you how to do the budget currency. And what you need to do is you need to go in and you need to add another option. And these can be in any order. So if we now go into option 2, we can change what we call the result basis. Counting book, yeah. The result basis, and I can go in. So here you can see we've got all the different currencies. So you can report in the actual consolidation rate or consolidated rate, which means that we will choose the exchange rate based on the account type. You can force it to the average rate, you can force it to the current rate, you can force it to the historic rate, and you can do the same for budgets. And what I mean by we choose the exchange rate for you, typically what you're seeing there is that for balance sheet accounts, it would be the current rate. And for P&L accounts, I think it would either be the average or the historic, but it depends on how your accounts are configured. So if you want to do it in the budget currency here, I can just flick to budget consolidated rate. You can see we've now got a second option in the formula, click OK. And yeah, typical, we get the same number, and that will be because the budget exchange rates are identical to the actual exchange rates, but that would flick the calculation over. So this will be in the budgeted rate. And if you want to then start consolidating those, you can either, so again, let me grab that. And if you want to start creating consolidations, you could, for example, change the main subsidiary to a consolidation subsidiary. And if I were to lose the subsidiary context and plug in a result basis here, this is actually going to create a consolidation across the entire org structure. And all of the conversions are going to be done at the budget rate. And then while that's calculating, let's also do selecting individual subsidiaries. So you can also select individual subsidiaries. So for example, we could do EU, Europe, Mexico. Well, let's do Europe, sorry, Europe, Mexico, UK, click OK, click OK again. And you can see that we've done an ad hoc aggregation of 3 different subsidiaries. And in this scenario, because the first one listed here is Europe, these balances will have been aggregated together and displayed in euros. And that's because it was the first of the subsidiaries listed in that list of subsidiaries. There's lots of different ways of achieving the same goal. But the key thing is to use that result basis to change the fundamental way we calculate the intercompany currency amounts, and we switch over from the actual over to the budget rates.